So here we are, chatting about a topic that sounds like it escaped from a sci-fi novel, quantum computing. But plot twist, it's real, it's powerful, and it's sneaking its way into finance like a clever raccoon in a bank vault. This isn't your average tech buzz. We're talking about a total shakeup in how we process information, make trades, and possibly even catch digital tricksters in the act. Now, what makes quantum computing so special? Well, it plays by its own rules. Rules that make classical computers look like they're trying to solve Sudoku with a crayon. Instead of plain old bits, those trusty zeros and ones, quantum computers use qubits. These quirky little things can be 0 and 1 at the same time. It's like your laptop suddenly deciding it can multitask across multiple dimensions. Add a dash of something called entanglement, where two qubits are besties across space and time, and suddenly you've got a machine that can crunch financial problems before your coffee cools. Naturally, finance folks are peeking over the quantum fence with curiosity and maybe a bit of envy. With the power to analyze gigantic heaps of data in a blink, quantum computers could flip the entire trading game. Think lightning-fast portfolio optimization, supercharged fraud detection, and a level of risk modeling that might finally make your financial advisor stop sweating. Big tech players are already building their quantum empires. IBM is out here offering quantum tools in the cloud, Google's flexing its quantum muscles, and even Wall Street giants like Goldman Sachs are tinkering with algorithms that practically read market moods. It's not a tech trend, it's a geeky arms race with real money on the line. And if you're wondering how to get a piece of this futuristic pie, there are companies and even ETFs that are laser-focused on quantum technology. Rigetti, D-Wave, and a whole crowd of startups are building processors that could one day solve mysteries of the financial universe, or at least help pick better stocks. Want to dip a toe without going full mad scientist? Quantum ETFs let you spread your bets across the field, like putting your chips on every horse in a race where all the horses are robots. Of course, not everything in the quantum realm is sunshine and tidy graphs. We're still in the early innings here. Quantum machines are fussy, and most of them can't yet outperform a decent laptop on practical tasks. The tech is powerful, yes, but also temperamental. And with any shiny new frontier comes volatility, stock prices that bounce like a toddler on a trampoline, and progress that's more zigzag than rocket ship. So if you're thinking of jumping into the quantum sandbox, keep your brain helmet on. Diversify, research like you're trying to beat Sherlock Holmes at trivia. Understand that we're still baking this cake and not all the ingredients are stable. But also, don't snooze on it. Because those who get comfy with the quantum quirks early might just find themselves ahead of the next big financial leap. Things are moving fast. Breakthroughs in qubit stability, error correction, and scalability are inching us closer to practical magic. And with governments and regulators catching wind of what's cooking, the rulebook for how quantum tech fits into financial systems is likely on its way. So what's the move? Stay curious. Keep tabs on the innovators. Watch those market shifts. Read up. Listen to nerds. Be a nerd. Because the age of quantum finance isn't some far-off fantasy. It's arriving with blinking lights and wires and the potential to spin the world of investing into something entirely new. If this sparked your interest, smash that subscribe button, drop a comment about your favorite quantum tidbit, or tag a friend who thinks Schrödinger was just a guy with cat problems. Until next time, keep your strategies smart, your portfolio weird, and your imagination wide open. The future of finance is getting delightfully strange.